Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Blue Star, a very marquee stock in the AC industry, and let's understand should you buy at these levels or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Blue Star, it was formally established in 1943, so quite an old company of around 80-85 years ago. It is focused on providing white goods such as water purifiers, AC, air purifiers, etc. But their major business is in the AC domain. They are the leaders in the commercial AC services. That means they provide the most number of ACs to offices and to commercial complexes across India. They also manufacture air coolers, water coolers, central AC systems, and commercial refrigerators, which are used in companies which are engaged in products related to ice or ice creams, etc. The market cap of the company is around 8,000 crores at the moment, so it is a small cap and not a large cap. If you look at the financials of the company, then the sales have gone up by around 11%. But look at the PAT growth. The PAT has, the profit after tax has risen by around 48%. Lower taxes have helped, but even taking care of lower taxes, the profit growth has been around 40%, 37 to 40%. If you take out the lower taxes regime that has been put up by the government, the debt is extremely low, and the best part is the return on equity. The return on equity for Blue Star is around 22.7%, where the operating profit margin is on the slightly lower side at around 6%. So if you look at the performance of the stock, then the stock has given smart returns in the last 5 years. Uh, Although it has been in a range for the last for 1 year or 15 months, but over the last 5 years, it has given tremendous returns. It is a strong brand which has a leadership in the AC segment, as I explained. So once a leader would remain a leader unless something really bad happens with the company. So it is gaining market share in this difficult economic environment, and the management is top class, very transparent, and giving dividends. And the negative part is the operating profit margin or net profit margin, which is a low. And in this business, especially in the consumer business, these margins are relatively high at around between above 15% to nearly 30%, even 28-30%. So that is quite low, and this is what the company needs to look at. They need to work on the operational efficiencies going forward in order to gain more market share and have better bottom line, even better bottom line. At 37 times earnings currently, it is reasonably priced, so it is not expensive. There are many consumer goods companies that are currently trailing at 50, 60, 80 times, 80, 85 times. This is going at around 37 times, so you can easily have an appreciation of 30 to 40% in the stock in the coming summer season. Remember that it provides ACs as their main business, so the summer season would be big, starting from March, and I believe that from March to October the stock would also do well. So basically between March till around June, July, the stock really moves up 25-30% from the current level. So one can look at it. A standard disclaimer applies. The dividend payout ratio is pretty good, and it has been giving consistent dividends over the last few years. In my opinion, it is a long-term gem. Reasonable valuations at 37 times. It is coming in slightly cheaper to other consumer good companies, and white good companies can easily go to 50, 55 times. Becoming a consumer products play rather than an AC play, as I mentioned, that it provides water purifiers, air purifiers, etc. So it is becoming more of a consumer durable play rather than just providing AC. So expanding its bandwidth, and probably over the next few years it will come out with even newer products, Just that we have to look at whether the numbers of these new products being sold is pretty good, because there is competition in that market as well. But yes, they are the leaders in the AC domain, and you need to consider that. Uh, and also remember one thing, that the AC penetration in India is in single digits. It's, I think, around only 4% compared to other products. And really, people are not able to afford AC at this point of time, primarily because of two reasons: because of their income, and secondly, because of the span of electricity in India, which is extremely less compared to other developed nations. But with the Modi government doing a lot in order to bring in more electricity to more people across India, these companies, especially white good companies, will do really well in the coming years. And this is the moat that AC or washing machines or such electronic products have. Whenever electrification really picks up across India, in third tier cities, in villages, etc., you will see AC penetration getting larger, because there are people who are earning pretty good, who have good businesses. There are farmers who are rich, but they don't buy ACs or such products, because there is very less electricity in that region. So AC penetration is less, and once these things get rectified, you will see better penetration of ACs and more sales for companies like Blue Star, Whirlpool, etc. The market cap of the company for such a business is only 8,000 crore, I believe. For such businesses, and across the board in white goods segment, very less companies have higher market cap. Other companies have market cap between 1,000 to 10,000 crores. I believe this whole sector would flourish over the next 5 to 8 years, and the whole market cap of the sector would probably triple or become four times in the next 10 years or so. So one has to take that into consideration as well. Another reason for concern is the low promoter holding. The promoter holding of the company is extremely low, but institutional holding is high. So overall, you have around 75 to 78% of the stocks with, you would say, the strong hands. But yes, the promoter holding is less than 40%, which is extremely low considering the kind of business that they are into. But if you consider or combined FIIs, DIIs, and the promoters, then HNIs, and then it comes down to around 77%. So only 23% is with the retail investors. If you look at the technicals of the company, then there's strong support around the 660 levels, although it is trading around 800, 830, I know, but the biggest or the strongest support is around the 660 levels. The short term support is around 780 to 800 levels. It has already run up 60% in the last 1.5 years, so it has given smart returns in the last 1.5, 2 years. It can easily correct around 10 to 15% from these levels, so one needs to understand that and wait for such correction. But do not wait a lot, because once the summer season begins, these stocks does do well for the first 2 3 months, from March till say June, July. So any correction in this month is a good buying opportunity for trading as well. The major breakout is expected above 880. So once it crosses 880, you could see even 1080, 1100 levels very quickly. Can buy even at these levels, as I mentioned, because the seasonality effect will kick in a few weeks time. So what needs to be done? Buy close to levels of around 780. It is a market leader, remember. So 780, 800 is a very good level to buy a good market leader in its segment, and look for massive falls to accumulate these stocks. So if you buy at 780, goes to 900, then falls again 10%, go ahead and buy again. It is difficult to trade such stocks, because you never know when this season plays out, and it could play out in the next 2 months or could go on. So take that into consideration, and it is a top long term buy. So this was my video on Blue Star. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away.